we do think that it's the right time to look back at China selectively. Interestingly, in the last 2 years, when everyone was trying to play the recovery post-COVID, our strategies in our EM strategy were actually strongly underweight China for the last 2.5 years. We've seen a very strong increase of Chinese allocation in the last quarter of last year on the back of much more attractive valuations, and some of the largest tech names in China becoming really compelling from this value perspective.
The AI story is an interesting one from the China perspective, because firewalls that exist in the West that trap data and stop AI from tapping various different sources isn't necessarily a problem in China. But that said, access to chips to train AI, the most advanced chips, is a problem. So how do we think about China navigating some of those cross currents?
So China is very well positioned on the AI side. It's very much leading with the US. Currently, they have fantastic research labs and teams. They have a massive amount of data. We should not forget, the size of the country and the data they can rely on. And if you look at recent months, what is very interesting is to see the large tech firms more and more involved on the AI community side. They open source, so Alibaba Cloud open sourced one of the state-of-the-art models on the tech side last year. It's among the models that stand at the very top of the leaderboard of large language models today. Tencent released models also on their side that they use on their WeChat platform. So the big tech firms are very present. They have models of the highest quality, which basically are head-to-head with the US. And I think it's a very interesting play when you look at these Chinese tech firms.
We were just talking a moment ago, Emmanuel, about the paradox that is China wanting to increase its industrial self-reliance, but at the same time also pledging to give foreign companies equal treatment as domestic peers. In other words, trying to encourage more foreign investment. Are there any opportunities to invest on the back of that theme, if indeed we do take China's pledge at face value?
So, obviously the issue is that China needs inflows, so needs capital flows, and is promising a lot in terms of foreign investments. I think it's remains very risky to build a company in China, to invest in China for corporates. I think it's from our perspective, from investor perspective, we do believe that. And if you avoid the financial sector, the banks, which are more and more exposed to the real estate downturn, that there are very attractive peaks there on the tech front. Some of the large tech firms. We just believe that the outflows of the last 2 years have created massive opportunities for stock pickers. It's opportunities that are difficult to access if you go through passive investments in the country. So you should be very much selective in picking names there. And that's why we see the allocation in our strategies increase significantly in the last few months.